Thank you very much for the warm welcome, and thank you, Yvonne, for chairing this morning. It's good to be in Dublin, so it's good to be with the Minister, with the Governor, the Deputy Governors, and indeed the team behind this event in the Central Bank. It was perhaps an idea that was sparked maybe in a room, in a discussion, but it took legs, and in my view, yesterday, from what I've listened to and read, has been a great success, and I think today I hope we'll build on that. So as I said, it's a pleasure to be here because I've been asked to take a look beyond the horizon to the future of financial services, and I think we all know that the financial system and indeed financial services are going through a time of great change, but the backdrop and the background to this change is a very challenging economic and geopolitical stage. If you look to the future, it is laced with uncertainty. And as we embrace technology, I think we might take time to reflect on this fundamental idea of service in financial services, given that the overall theme of this important two-day event is about supporting the economy, delivering for consumers, or the consumer. And I was very interested that there's no and, it's both. And they both have importance and relevance. So I think it is a very key topic. So maybe a word in my deliberations will be about the backdrop that I speak about, the current economic outlook, what we're doing then in the Commission around building the future, built on the past, but also looking to what's coming next. And then really gazing into what might happen if and when technology offers more and more solutions. But going back to October 2020, when I took office, we were gripped with a horrible pandemic. And it was extraordinary what happened during that time. Things that were really unprecedented, that people said could never happen, would take decades, happened overnight, because necessity is the mother of invention. And I think in the financial system in particular, those changes were dramatic. They worked because they were necessary, and people were able to continue engaging with the financial system despite the fact that we could not meet and we could not physically go to places. So I think we have seen, because of COVID, a system that was geared for change, but it has accelerated at an extraordinary pace. And indeed, if you look to January of this year, we were quite optimistic, coming not quite out of COVID, but we were managing the situation very well. But it's fair to say that in February, when Russia invaded Ukraine, I think our optimism was severely dented because of the impacts, both economically and indeed in terms of geopolitical developments with that illegal invasion, because it did exacerbate pre-existing inflationary pressures and also was weighing on and is weighing on economic growth. So we see a macro environment which is increasingly more challenging, tightening financial conditions, volatility, and we even hear talk about recession. So there is that anxiety in the system. And yet, the financial sector has proven to be resilient, first through COVID, and now during the current challenging times. And of course, that's in no small part to what happened after the crash a decade ago, where we put in place regulatory reforms in order to avoid instability in the future. And out of that very damaging financial crisis, we have built a robust and well-performing financial sector, but there is unfinished business. For example, we don't yet have a fully functioning banking union. I'm often asked by citizens why we can't have these capital flows freely across borders. Now, we did implement the first two pillars of banking union, single supervisory mechanism and the resolution framework, and we will continue to work on banking union, not going as far as we believe we need to, but we're answering the invitation of the Eurogroup to reform the crisis management and deposit insurance framework. And here the goal is to ensure a more consistent approach to resolution so that any bank can exit the market smoothly if it needs to. And that will bring greater financial stability, protect taxpayers and improve the confidence of depositors. And we need to do that in order to protect the European banking sector from a future crisis and to safeguard financial stability. Because while post-crisis reforms are about the stability of banks, these reforms are also about protecting everyone's deposits and limiting the risk that citizens end up footing the bill for bank failures. And that brings me to the next big structural project for the European financial system, the Capital Markets Union. So we want integrated capital markets. They're important for the financial sector. They're vital for a resilient European economy, allowing businesses, particularly SMEs, have access to more sources of finance beyond bank loans. Also supporting startups and innovative businesses as they try and grow and expand. And offering people more opportunities to save and invest for the long term. Because one of the things we saw during COVID was those who are working were saving and saving and saving, but not investing. And that's something we need to look at. So to build a European Capital Markets Union, we will have several proposals building on steps already taken. Next month, we will propose a Listing Act, making listing on public markets easier and more accessible, particularly for smaller companies. We'll propose making the rules on insolvency proceedings more consistent across Europe. In December, we will also come forward with measures to make the European Union a more competitive and attractive clearing landscape by fostering the demand for and supply of derivative products at EU CCPs and by strengthening the EU supervisory framework for those EU CCPs. Next year, we'll also propose a common, standardised EU-wide system for withholding tax, and the absence of this framework is an obstacle for cross-border investors. In spring, we'll focus on retail investors with an ambitious strategy. And this will focus on improvements to the legal framework across the different stages of the investor journey to increase their trust in capital markets. We're looking at a broad array of issues to make sure the rules work well, including disclosures, product suitability, inducements, and the quality of financial advice. And we will have something to say on financial literacy, financial awareness, financial savvy, if you like. It's a topic that's important to me. Although I do read to the end of articles, and I read in one of the papers this morning where somebody was quoted yesterday saying that financial education doesn't work. Well, then we need to fix it, because we need it to work, because we want financially astute citizens, particularly in times of inflation and high interest rates. So in order to build on this retail investment strategy, we've done a lot of research. We've talked to all of the supervisory authorities and consulted widely. And there are, as you know, some tricky questions. So it's no surprise that some areas in the public consultation attracted strong and diverging opinions. We recognise that there are many important issues and we're carefully considering the potential options. But my view is we should be as ambitious as possible if we are serious about unlocking the potential of the Capital Markets Union for the retail investor. The Capital Markets Union is also about unlocking finance and getting investments flowing across the single market. And we all know, and Minister, you alluded to it very strongly, that the transition to a sustainable future is amongst our most urgent and demanding investment needs. You know the European Green Deal is very ambitious to reach net zero by 2050. And the ongoing energy crisis and its impact on the cost of living again highlight the need for more urgent action around alternative energy sources. Sustainable finance is now a big buzzword in the financial system, and it will allow the system to play its part in this transition. And already sustainable finance is moving into mainstream. So people are asking questions about products, not only in the financial world, but products generally, and are asking themselves how they can be, in a way, supporters and enablers of our transition towards sustainability. We also need greater energy security. Our reliance on fossil fuels has really been exposed with this illegal invasion. It's important to also stress that we have made rapid and dramatic changes in our energy mix. We've reduced from 40% to 9% our reliance on Russian gas. We're sourcing gas elsewhere, and yes, that does come at a cost, but we're also reducing our energy use. The transition to a carbon-neutral economy requires huge investments, public and private. Public will not be enough, so private investments are crucial. And our agenda on sustainable finance is about helping to direct private investment towards the transition to a more sustainable economy. You all know that the main, if you like, centre of our work is the EU taxonomy, a guide to economic activities, their environmental impact, and whether they can be considered sustainable. And this guide is really important because we were being asked by the system, how do we know? And therefore, not only was Europe talking about a taxonomy and leading on it, but it is a discussion that's happening globally. Clearly, investments in renewable energy production are front and centre of the taxonomy, as is work around construction, retrofit, energy efficiency, and research into clean technologies. We also have a very useful online tool, the EU Taxonomy Compass, to help investors and companies navigate taxonomy activities and criteria. But it is a challenging piece of work. Developing a taxonomy is challenging, and we thank our outgoing platform on sustainable finance for incredible work in helping us produce a taxonomy. Developing sustainability reporting standards for corporates and the financial system is also challenging. And ensuring consumer protection against greenwashing is really important. We're working to make sure that sustainability claims are credible and robust. The Corporate Sustainability Reporting Directive will set out guidance for companies to report on sustainability issues, their business strategy on sustainability, and indeed transition plans and progress towards meeting the targets they set. But of course, climate change is a global problem, and therefore it needs a global response. I'm conscious that Europe is ahead, leading the way, and we want to show leadership. But we're also very conscious of the need for global coordination and cooperation. So European sustainability standards will and are being built on what's already there, and we will contribute to global standardization initiatives. We want to seek as much alignment as possible with the work of the International Sustainability Standards Board, even though, as I've said, Europe is likely to go further and faster to meet our more higher ambitions on climate. Our Sustainable Finance Disclosure Regulation is now in application since March, and it is about the transparency of sustainable finance products, including ESG impacts and risks, and how investments are financing taxonomy-aligned activities, and how investments might be exposed to unsustainable sectors, including fossil fuels. Transition finance for SMEs, consumers and corporates, and financing a credible transition efforts are key to our work. One of the things that I'm conscious of is that there are green investments today, but they're a very small part of the market, and the biggest change will come investing in the transition with those entities that are moving in that direction. So we have to make sure to allow money flow in that way. So we're assessing some issues, for example, on how best to encourage green retail lending, particularly again for SMEs, for startups and households. And with the support of the European Banking Authority, we're examining what needs to be done to promote the growth of green loans and green mortgages. Indeed, some are already on the market. Retail investors can make a difference by specifying their preference for sustainable investment products, which need to be taken on board by financial advisors and the investment chain. And we're also aware that expertise may not exist everywhere in this market. So we're supporting this part of the work by boosting financial advisors' sustainability expertise. And last but not least, the Commission continues to help Member States in their efforts to support SMEs to voluntarily report on sustainability risks and impacts. One of the issues that is often raised with me by companies, particularly SMEs, is their concern that they may not be able to meet all of these standards, or indeed have the expertise or the finance to do it. But we don't want SMEs to be left out of the equation, because they're important parts of supply chains. So we're working on developing standards that SMEs can use on a voluntary basis. So simplified sustainability reporting standards. The European Financial Reporting Advisory Group is already working on these, and I think this will make an enormous contribution to allaying concerns for SMEs, but equally making sure that they are included in our work on transition, because they are key to it. In one sense, sustainable finance allows finance to serve consumers to make sustainable choices, and finance serving society by helping fund the transition to this more sustainable economy. And money is key to all of this. And I think what struck me when I took over the role in financial services, there was a sense in which the financial system is on its own out there somewhere. But actually today the financial system is crucial to every single sector, and it's crucial around our whole approach, not just on climate change, but around environmental issues as well. So money matters, and we need to make sure it is spent and invested in the right direction. But of course, not only is sustainability issues driving change, digitalisation, as I said at the very outset, is bringing about huge structural change to the financial system. So we're relying more on digital processes. We have innovative applications, we have new products, new asset classes, and these are all gaining ground, transforming the way people engage with the financial system, both as individuals and as businesses. And in September of 2020, the Commission adopted a digital finance package to respond to the opportunities but also the risks to the system from digitalisation. So we recently got agreement on the markets in crypto assets regulation to bring order to crypto markets, here with strong consumer and investor protection. And that package also includes the distributed ledger technology pilot, which applies from March of next year. And this will allow market participants to experiment with issuing, trading and settling shares or bonds using blockchain technology. We also recently reached agreement on the Digital Operational Resilience Act, which will help the financial system withstand digital risks like cyber attacks. Fraud and cyber attacks are a threat to the financial system, and our cyber security needs to match the severity of that threat. But of course, in some areas, we act to nudge the financial system, sometimes quite heavily, towards offering greater customer service. So if you take last week, we made a legislative proposal on instant payments to make them more universal, affordable and secure. And instant means exactly instant, so a payment that is sent and received in less than 10 seconds, 24 hours a day, 7 days a week, 365 days a year. And we believe this proposal will help Europe be a leading payments market and boost our competitiveness. But it's also going to make a real, tangible difference to everyday life for businesses, SMEs, who will have more control over their cash flow, for consumers who can make more payment options, they can split bills, buy products, etc. And I think it's a great demonstration of the benefits that rolling out technology can bring. You will all know the Commission is working at technical level with the European Central Bank to explore the possibility of a digital euro. And this can provide businesses and citizens with more innovative, competitive means of making daily payments. A digital euro would provide a public money alternative to private means of payment, while citizens would still maintain their right to access physical cash. And I think that is an issue that certainly comes up in conversations around my role as Commissioner. And when I have a public stage, I always say that I defend the right of citizens to have access to cash. It's important to citizens, not just older citizens, which we tend to think of, but I think across the board there is a sense in which some citizens like access to cash. And I'll mention, as the Minister did in his very rounding speech, the issue of anti-money laundering, because clearly we want cash to be clean, because otherwise it pollutes the system. So the digital euro is a work in progress. We are moving from open banking to open finance, so this is about data. Access to data, how do we share it, what do we share, who gets to use it. I'd like to think, and I think it's hugely important, that we ensure that consumers are protected, that they have control over what is shared, how it's shared and how it's used. And I think our work on open finance will encourage that debate and create more awareness of that we as individuals have that possibility to control. Trust I mentioned earlier. I think the financial system lives or dies on the basis of trust. It's key to financial stability and it's key to consumer belief in and trust for the financial system. So when it comes to all of these developments, including, as Minister, you alluded to, the revision of the Payment Services Directive, we will take account of stakeholders and look at what's best for the financial system. I won't go into the detail. I think the Minister very accurately dealt with the anti-money laundering package. The truth is that we're not doing enough to tackle terrorism financing and money laundering. The criminals are better than we are. We need to get ahead. And I think the move to a European authority with greater, if you like, coordination of member states is key to that success. So the co-legislators are working on that, and I think there will be a good outcome because we need to strengthen our work on anti-money laundering. So that's the agenda of work in progress and where we're looking towards. And those are the priorities as we move into 2023. But I want to tell you about a little gathering I had last week in the Commission. We ran a competition. I asked young people in the European Year of Youth to come forward in a minute, because most of us don't listen for 30 seconds anymore, but in 1 minute what they thought about the future of finance. And it was fascinating when I gathered them in a room together. The level of engagement and just their thoughts was really inspiring. And actually I think we need to listen more to that age group than to the age group in this room. And most of you are younger than me, so apologies if I age you considerably, because I think they are the future. We're the present, and indeed maybe the PAST as well, but I think we need to listen to where young people are at. What was fascinating was there wasn't a uniform view that technology is wow and we're all going home or going in that direction. There were some cautious voices. On the other hand, there were some very challenging voices, which basically was saying, let technology rip on and let technology upend the entire financial system as we know it, including, dare I say, Governor, the role of central banks. But I pushed back, you'll be happy to know. But it was good to have them in the room and to listen very carefully. So I think their views are about where we're all at. We're not sure, we know the possibilities, but we're not sure of eventual impacts and outcomes. So things might accelerate or they might slow down. All it takes is a blip in the system for us all to lose confidence or trust and things become a little bit more cautious. But what we want to see, for now and indeed for the future, is a financial sector that is resilient, strong and competitive in its own right. I think that's hugely important. But we also want finance to serve the economy by providing it with a stable backbone and investment to make it stronger and more sustainable. A system that serves the planet by sending and ensuring that investment is in the right direction, and one that serves people by being resilient and providing a reliable source of useful products for all of us. A system that provides choice, including the right to access and use cash in transactions. So we are building with the regulators, with our member states and the European Parliament, a solid regulatory framework that will continue to ensure the financial sector is resilient and competitive, but all the while looking at what might come next. And what if and when decentralised finance takes hold? So here we're talking about providing financial services without a central intermediary like a bank or exchange. Now this really does challenge both international standards and European Union rules because we tend to base those on entities. In fact, decentralised finance challenges some of the fundamental aspects of the financial system as it currently exists. Now, needless to say, we in the Commission are monitoring the developments and risks in this very fast-moving area very closely. But every expert I've talked to on this area of finance, really nobody has any certainty as to what sort of system we will have if it takes hold. And therefore, I think we need to have conversations and debates, which we probably have now, around what we think we might like to see, and then how we as regulators, as policymakers, respond. My last remark is around timeliness. I'm acutely aware that technology, as I said around COVID, we did things that were dramatic. We thought we'd never do them in a short period of time. I ask myself the question in the policy side, and I'm sure regulators do as well, how do we keep up? How do we make sure that our rules, our regulations are fit for purpose in this fast-moving area? And I think we all don't have the answers, but I think we are aware, given the rate and pace of change in recent years, that it is going to be something that will challenge us, but I believe we're up to the challenge because we have the architecture in place to make those choices with our co-legislator. So apparently we're having a chat now with the Deputy Governors, and I'm looking forward to that. Thank you.
Thank you again, Commissioner, for your thought-provoking remarks, and you spoke very nicely to the challenges that we all face, but I was really struck also by the level of ambition that you exemplify in your remarks, and it's something that gives us all here great hope, but also excitement about the future for financial services. So I'm delighted now to say that we are going to have a fireside chat. Commissioner McGuinness, as you can see, is being joined by Central Bank Deputy Governors Derville, Rowland and Sharon, Donnery. It's a very special opportunity to hear the thoughts and insights of these three individuals who are working at the very heart of policy making in European and Irish financial services. Thank you all for being with us today. I'm very much looking forward to the discussion.
So I think it falls to me to start off, and I guess the first thing I want to say, Commissioner, is you are so very welcome back home, and we are absolutely delighted to have you here. And I think I speak for all of us to say we're very proud of you and your achievement as a woman, as a leader in this role, and we're delighted to have the opportunity. Absent, we have a side, but I don't think we have a fire. And I think for, yes, health and safety reasons, we won't attempt such a thing. But it's really intriguing that for the past number of years, in our own work in the central bank, one of the cornerstones that we keep returning to is the concept of trust. And I could hear it threaded through all that you said today when you were talking about the past, the present, and looking out into the distant future. And actually a concept that we keep repeatedly coming back to is actually trust is one thing, but trustworthiness is a better thing, because that can support confidence into the long run. So I hope we can have a chance to cover a range of the topics that you raised in your excellent remarks today, but it'll be all to naught if it doesn't actually deliver outcomes for economies, for consumers, for investors, in which they can trust, and a system that they can trust, even if it's not perfect, but one that delivers as expected, with products and services that operate as intended, and in a way that can help people get on with their lives. Because actually, I think we all can agree, consumers, investors and businesses don't necessarily want to think about finance. They want to use it to support them to achieve the aims, to buy a house, to get a car loan, to support the growth of their business, to get investments so that they can thrive. And all of that depends on trustworthiness.
Yeah, I mean, to some extent, I think we all trust things now in a more rapid way. I think it's a bit of blind trust. You use an app, or you presume it will work, so you have to trust that there's a back system there. I think we also know that trust was damaged by the financial crisis. I mean, that is something, and I know that the Banking Culture Board are working really hard around this area, and I had a very good meeting with them recently, and it is very impressive what's happening. How do you maintain trust in a system where you less and less interface with the person? Because I think of a certain generation, we trusted in people. Now we're trusting in systems, we're trusting in technology. And of course, it's only when it goes wrong that we will really feel the concern. And that's why I mentioned in particular cybersecurity, because we saw where, you know, bad actors can attack our systems, our health systems or our financial system. They're doing it every single day insofar as fraud and text messaging and all these kinds of things. So I think that the issue of trust is fundamental in every part of our society, but in finance in particular, because we do trust our wages, we do trust that the loan will come, that the repayment will be accurate, that there will be no misbehaviour. And of course, recent examples have shown where the system itself wasn't exactly trustworthy. So, I mean, for me, I think it is core, and that's why I mentioned it several times. I'm not sure myself about what the future holds around trust and technology. I think there is a generation that have grown up and are growing up with technology that may have a different view about their access to banking and finance using technology than a generation that have bought into it now. Will that impact trust? I don't know. How is that going to evolve? And when there is a problem, what happens to trust when it gets broken in a system where it's very hard to connect with a person? I mentioned the issue of service, and I did it deliberately because, you know, we all appreciate access quickly to products and services online, but we also appreciate when there's a problem, sometimes you need to talk. talk to somebody. It can be difficult to find somebody to talk to, which can be very lonely, 45 minutes later on a phone.
Yeah.
It can, but you can get lots done while you're waiting. But I mean, in one sense, I raise that because it's the human experience as I hear it.
Yeah, maybe two other aspects of trust I'd be interested in your views on. So first of all, kind of institutional trust. So as Derville said, I think trust has been a really common theme through the conference in the system itself. But part of the consideration around trust for us in the central bank is also trust in the bank. So part of our vision in our strategic plan is about being trusted by the public. And I think one of the things that happened in the crisis was the sort of pressure on the institutions. And there's even a debate, I think, now about sort of society and its trust in institutions. So when you think about the role of the Commission, for example, the role of the European institutions, what do you think about the sort of role of trust in the institutions? And then maybe a question also, because you mentioned the digital euro, and like the whole concept of money is money itself, you know, the money in our pockets is founded on the concept of trust. I very much agree with your comments around cash and the need to sort of protect access to cash. And I think part of the design of the digital euro is around complementing, not replacing cash. But clearly a key thing we have to aim for is sort of trust also in the very nature of money. And part of that, I think, comes from institutional trust also.
Well, I think we need rather to start thinking about money in a different way than we've traditionally thought about money, either physically or in the digital sphere. And I think around institutions, I think it's been happening over time that institutions are questioned as they should be. I think what the central bank is doing today and yesterday is hugely important in terms of public trust, that you're dealing with these big topics, you're broadening the audience, you're bringing people together in the financial system and with consumers in the room. To me, that's really excellent because it means that the Central Bank of Ireland is not a remote entity, but it deals with real issues. On the big questions then of digital euro and cash, again, I look to my 14 young people in the room and I listened to those from Sweden who said, cash, what's cash?
What's that?
German colleagues say, cash, yes, please, and don't limit my access to it. So it's interesting that in the anti-money laundering proposal, when we were looking at the limit we might set on for a transaction, we thought 10,000 was a reasonably large amount. But for some countries, they actually said, no, we don't like this. We'd like to have access to greater amounts to make transactions. So there are cultural differences as well. So Europe isn't a one entity. But I think where Europe is very common is that a problem in the financial system in one part of Europe has an impact across Europe. And indeed, globally, if there's a problem in the financial system, it impacts as well. So again, it's about this question of where do we want the future to be? Do we allow technology race ahead with all its wow potential? Or do we at some point pull back and say, is this direction where we need it to go? I mean, again, young people would say, look, we've grown up with this, we'll always be able to use technology, but there may come a stage in life where people are not able. And what do we do with that sector of society that need more support around the financial system? So I think there are areas that we need to explore more deeply, but the whole bedrock is to make sure that the system is stable. And I think that's a large part of the discussions yesterday and today, and my work as well, is around ensuring financial stability, because that's where you will get the embedded trust. Maybe a last remark, which I want to refute, is when I talk to some stakeholders and indeed individuals, I'm accused of trying to remove from citizens the right to hold cash. And I think we have to be very careful around the evolution of a digital euro, that this narrative doesn't take hold, because it's simply not true. I've repeated here and again that we want to make sure there is access to cash. We may need to look at where you have access to cash or not, because ATMs are disappearing across Europe. Maybe remote areas don't have access. Are there other ways of ensuring that it's there? So I think it's just to be aware of where issues, sometimes it's the little things that cause the greatest problems, but I'd be fascinated to hear your thoughts as well around how we as policymakers can do more around the issue of trust or reassurance, or, you know, speaking openly about the advances that are being made. Like instant payments, in my view, is a fantastic possibility that wouldn't have happened unless we push for it. I know there are those who say, please, you're going too far, but there's a whole lot of money that's inaccessible because money leaves my account and goes somewhere, and there's a gap of time before it gets elsewhere. So, I mean, I think those sort of public-facing policy initiatives should, I hope, allow people realise across Europe that we are here for the public interest. The financial system has to serve the public interest.
No, I mean, that's completely at the heart, I think, of everything that we do in the bank. The instant payments, though, I think is another example of those sort of practical realities that people get very frustrated about. I mean, we often get asked in the bank questions about where is the money in the meantime and what has happened to it and why hasn't it moved instantly. So I think when I think about cash, instant payments, digital euro, it's really about sort of facilitating the widest possible choice and people having access to the tool or the method that they need to sort of do whatever they need to do at any particular time. On your point about, I suppose, trust more broadly, particularly in our institution, I think it's good to hear what you say about the conference being very open. There has been a huge change, I think, in central banks in general, in terms of being much more open, much more transparent, much more accountable, and trying to explain much better our work. I mean, I'm sure people will see big changes in, I hope, in our communications, but also, for example, the approach of communications of the European Central Bank and other central banks globally to try to explain better what we do. I think in regulation, one thing that came up yesterday, and the Minister actually in his opening remarks talked a bit about it yesterday, to do with, and you picked up on it, the theme supporting the economy, delivering for the consumer, the sort of balance that's needed all the time between the costs and benefits, the choices and you know what's mandated and how you get that sort of balance right. To your point, I think very much in the interest of stability. Where is that sort of point where things are stable, but people have the right choices, but the firms are providing the services on a commercial basis, etc. So I don't know what you think about that.
Yeah, I mean, and that's a tricky one to get that absolute balance correctly. Yeah. But we have seen the evolution of fintechs and people who see an opportunity to provide a better service. So we want to make sure that they can access the market and that we can access those products, but we manage the risks as well. And I suppose there's always that view that we can get new products and services, but we shouldn't allow it be more risky. So we have to have rules that apply to new entrants to the market who are providing these services. But it's true that, for example, in the banking system, traditionally people may have gone to a bank for a whole range of services, that today they're going for some services, but they're going elsewhere for others. And that's a challenge that the banking system itself is dealing with, because there is more competition there. But again, our duty is to make sure that we don't inject risks into the system. But clearly, if you look at the evolution of some of these new providers, their products are being used. There is a big demand for them because they work for citizens and they work for business. So I think that all of this is hugely, I think there's huge opportunities already there, but more will come. But again, it's how we regulate it. I often get the complaint, and I'm sure some in the room would say, you regulate the banks very strongly. What about X, Y, and Z? But I would be very clear that we regulate all entities appropriately. So if the same risks apply, the same rules should apply to it. But maybe it goes back to my concluding remarks, which is more a question to all of us. How do we regulate in a time of enormous change? In the European system, we propose, the co-legislators rightly have to get and are given time to look at what we propose and make amendments. Now, we can react fast when there is a need to, but there is always a slight lag behind. So again, it's just to have this conversation so that there is an awareness of our role in all of this incredible change. But we saw too where some of the change went too far. So people do still like access to physical infrastructure. Maybe a younger generation not as much, but a lot of people do like that. The Minister rightly said the credit unions are providing that. And I think that's also an opportunity for entities like credit unions to carve out a place where they are unique. Everybody tries to find that unique selling point.
So I think part of what came up yesterday was the financial system needs to serve all of its citizens. So inclusion is important. And in the modern world with innovation, you not just need elements of, and we can come to some of the topics of literacy and information, but you actually need digital skills as well. So having options that serve all customers at all stages will be an important feature to retain for social cohesion, social inclusion. But it's interesting to me that you met those young people who, you know, it can accord with this idea of move fast and break things. But that, and it may not be surprising that as a regulator I might take some care about that, because some of the decisions that you make can be small and you can come back from, but some can be enormous. And the information, I think this is me, the information asymmetries can be hard to overcome for individuals who are making big financial purchases for the first time. So when we think about the gamification generation, who just like, it's like a flutter on a Friday.
Or a Monday.
Or a Monday, rather than an actual investment choice. And then we heard again yesterday that in fact older people can make better financial decisions. So as we look at Capital Markets Union, and I know that we're not asking for sneak previews of what might be proposed, but marshalling retail participation in the capital market will be to the benefit of all in Europe, to the benefit of our citizens themselves who need to save for their retirement and themselves to serve the desires that they have to achieve goals in their lives, but also for our economies. And to do that in a way, we've heard a lot of discussion around disclosure, it's information overload. What we really need is the decision-making architecture to help people make good decisions. We hear about conflicts and incentives. Can you give us a sense of some of the considerations that you have in your mind when you're thinking about this topic?
Well, I think the first thing is that a developing capital markets union is a huge opportunity for Europe because we're not there yet. So it means we're not getting the benefits of this free flow of capital, and we need to do it. It's a long time being promised. So all those technical steps I outlined, you know, they're quite technical, but they are the building blocks. When it comes to retail investors, I mean, again, there's a different culture in some member states, and we're different than, for example, the US culture. But we want to try and make sure money works for people on the basis that people work hard for their money. So it's good that money would work hard for them. So we need to look at, and we are, including a lot of research we've done around this investor journey, what works and what isn't working, looking at research around the issue of advice, quality of advice, information overload, and all of those things apply. So how do we, and I won't answer, I'll ask the question, how do we get the right level of information so that we can make informed decisions? One of the things that strikes me around diversity and inclusion is that we may make the wrong assumptions about age groups. Because again in COVID, how many of the older generation became rapidly tech savvy? Again, because they had to. So I think we should be careful about saying it's this sector of society or that sector. What does trouble me are those that may not have the digital skills or access to them, or, you know, but more and more we do have the rollout of broadband, so I think increasingly that should be less a problem. And sometimes digital skills are just, they grow from childhood, and I see children doing things with phones that, frankly, I can turn it on and off, and that's probably enough. But there's a way of, you know, helping those parts of society where there are need for more digital skills and more awareness around money. I do kind of think your point around gamification is valid, and I'm not sure that it is looked at as an investment. It's just, let's see what happens. There's an element of maybe the betting kind of flowing through the system. But it is probably an introduction to investment, if you call it, for a younger generation. Look at where people are getting their advice, though. I mean, they're not reading the long documents. I understand TikTok is a great source of financial advice if you were discerning enough to know whether it was good or bad. I think there's a lot of work need to be done in the area of social media where there is advice being given around finance. Because people will look, I mean, I think, and the more vulnerable the person, the more they will look for that unreal opportunity to make, if you like, a financial killing, where in point of fact they may be killed by that very decision. So I think there's need for a discussion both with in the financial system and those who are part of it, but also with the social media providers as to what is acceptable, how do you know, is there transparency around messaging? Because we all sometimes read something, believe it, and then realise we too were fooled by it. And that's not just in the area of finance as well. So again, this will impact on our discussions around the retail investment. But I think the most important thing, and that's why I go back to my appreciation of this event, is that we need to talk about money not in the traditional way, where we use these very, elaborate acronyms and structures and whatever. Because money matters to everybody at every stage of our lives. We need it for various things. It's there to serve us, and we want to get the most from it. And it's our responsibility in policy and regulators to make sure that happens. Now, we might complicate that with paperwork and whatever, but I think we have the capacity to focus on what the essentials are. So don't promise something that you can't deliver on. And if it sounds like it's too good to be true, it usually is too good to be true. So there are simple truths from our past where we can bring into this discussion. Notwithstanding that I'm often, and I'm sure in this room would hear back that, look, the documents are too complicated, nobody needs them, but we have to go through this process. So look, I'm not going to give you too much as to what will come, but I did say we will be ambitious. There's no point in having a retail investment strategy without ambition. But I think the most important part of it will be the discussion around it, just opening up the conversation. And look, we're three women sitting on this stage, which is unusual in the financial system, full stop. But secondly, women tend to be more disadvantaged around finance. We tend to live longer, which I'm sorry for the men in the room, but it's just one of those things.
Statistically
there
true,
has to be a plus somewhere. But therefore, we need to make sure that the quality of living for older women, but older men also, is decent, and that they don't live in poverty. And we're really concerned about recent events around that. So I think the financial system is front and centre of social change, of innovation. It is not apart from it, and that's why events like this, which probably was maybe a little bit outside the central bank's comfort zone, is so key to having a public conversation around the role of money, who gets access to it, how, who's giving the advice, is the advice sound, how do we make those judgments? On the point of, how aware are we financially, and it varies across citizens of all ages. I don't want people to understand the nuances of the bond market, although now it's right in our face to some extent. But I do want people to have the confidence to ask the right questions. And I don't think we're there at all yet. I think there is still that barrier to the expert and the person. That needs to change. I think it will change only by us saying these things in a public space where we're aware that there is an imbalance. It is one of the things I'm very driven by in my mandate, which, is a short period of time to be in this role, is to make sure that, the discussion around money is everywhere, because it affects everyone and everything.
So if I could
just
come in, because actually I think that's a cause for optimism. Yesterday, I think there wasn't exactly the right framing of some of the panel discussions about financial education and literacy, because a very key point that came out was building the skills in school or to ask the right questions is precisely the right way to go, so that at the point in time you make a decision, and then being able to access the right information to support the decision. But as we look into the modern world, we see, as you said, kids using TikTok and a gamification or a finfluencer approach. And we saw, I think, Kim Kardashian being fined by the SEC recently for undisclosed conflicts of interest with regard, I think it was to crypto. So in that brings a whole world of the future to our door, and I know that there's a huge interest in crypto. It's new, it's different. We, of course, will see risks in that, but it's more and more exotic elements are coming within the regulatory perimeter, and digitalization has offered that opportunity, but so too does it bring an epidemic of frauds and scams with it that we have to be thinking about in terms of what's inside and outside of the perimeter, but it does need to be tackled so that people can, coming back to, have trust in the trustworthiness of the system.
But actually, my understanding of this whole crypto development is it was it happened because there wasn't trust in the traditional system.
Yeah.
So people wanted
Moved
something
outside,
that was outside, not regulated, but could work on a machine basis, so no messy hands around it. Now we've said actually it could be at some point a risk to financial stability. You're going to see operators who appreciate that, who are in this space, and you will see those who do not appreciate it. So I think we have to be very mindful that every time we regulate, there's always a consequence that we have to watch for. For me, the crypto experience, as I watch what happened in the US and recently globally, I mean, this is a global thing, there's huge social consequences where things go wrong, with investments full stop, but with crypto in particular. And the promise of something always going up, I mean, I've never believed in it, but if some do, then we need to burst that particular bubble. Equally, when you link crypto with digital euro, and all of these discussions, there was a concern at some point amongst finance ministers about the evolution of perhaps big tech and launching a currency, and what impact would this have, and how then does a central bank implement monetary policy. So there are big issues around what's happening that we need to be able to, I suppose it's like the circular economy, we need to see things in a circular way that maybe in the past we weren't obliged to do that. But I think when it comes to regulating crypto, again, Europe has led the way. I was in the US recently, and it was really good to have an exchange with politicians there about what we're doing, how we did it, and sharing that experience, because it is global. It is like climate change, which is a global issue which needs global responses. I mean, crypto is global. There are no borders. There are no barriers. But we don't want either to lose potential innovation. Now, I know there's some in the room who would not put the word crypto and asset in the same sentence, so we won't even look in the direction.
No, we know who it is, though.
We know who that is. I think that's probably wise, because, you know, assets are assets. At least I understand what they are compared with liabilities. So I think it's wise to have that judgment. But we couldn't ban crypto because, again, you push it further away. So the best we do is what we've done, which is regulate. And we've had strong, obviously, support from both Parliament and the Member States for this. There were environmental questions raised during this whole crypto discussion as well. And I think they will probably deepen. And crypto providers will have to look at that. So, you know, there's an awful lot happening. It's certainly an area of work that would keep you awake night and day if you didn't need your sleep. Because it is so fast evolving. And there are many different views as to how it should evolve. Whether the dead hand of regulation will remove from innovation or take from potential innovation. I think that is not how I would approach it. But I don't want to be seen to allow something happen that was in clear vision and that we didn't take the appropriate steps. And I'm glad to say that, you know, I think the Commission, before my arrival into this role and now, is moving in the right direction with being measured, but being reactive and strongly reacting to parts of the financial system that are changing dramatically so that we are ahead of the curve.
Yeah, I think at that time you mentioned about the kind of concern about crypto and what that meant for the monetary system. I think takes us back to trust, actually, because I know a lot of the debate then was about the sort of risk of the whole basis of trust in the system being kind of undermined. I'm sorry to tell you, since you mentioned being awake at night, that the French governor, the Banque de France, was here yesterday, and he said financial stability requires constant vigilance. So I actually don't think there's time to sleep. But we're almost out of time. But maybe one last question just before we wrap up, because I mean, you've committed, and Yvonne talked a bit about your career, a huge amount of your career to Europe. You're MEP, now Commissioner. It's the anniversary of Ireland's membership of the European Union next year, 50 years. So maybe just some thoughts on that to wrap us up in terms of, I mean, obviously it's been hugely influential in Ireland. We can see how influential Europe is here, but we also play, I think, a very strong role in Europe, another aspect that was discussed at some of the panels yesterday. So
yeah, I think being in Europe, it's part of our DNA now. It's embedded, because there is a generation who know nothing else. We're just European. I suppose my memory of the referendum, because I was old enough, I didn't get to vote, I wasn't that age, but I remember my parents voting, and I remember the debate. And I've said before that in one sense it was a leap of faith that we would move forward. We felt this was something that would evolve, but nobody really knew where it would bring us. And I think, I mean, while we've had ups and downs and traumas and difficulties, I think the direction of travel for this country has been very positive. And I think we've played a very strong role in the European system. I mean, I dread when you read out about, thank you very much, Yvonne, for the lengthy what I did next. It means I've lived far too long and I need to just condense it. But I did make, you know, a quiet promise that when I got elected in 2004, I didn't know whether it would be for 5 years or more, but that I was going to make good use of it. And I was going to make sure that the voice of the people who elected me and this country was heard where it needed to be. But what I discovered was the most important thing was not speaking, but listening. And I do that more and more now. So if I'm silent and nodding at you as we have a coffee, it's because I'm soaking you for information. I think we all need to listen a bit more. I think that if you look at the number of MEPs we have, we're not a large body of political, and we don't all agree, which is important. But I think, you know, my role as Vice President and first Vice President was by stint of working with others and finding ways of making sure that I could help somebody with a problem so that I would get help in return. I think for me, one of the biggest joys, even though it came out of great sadness, was after Brexit to hear members of the Parliament that were not Irish standing up and talking about Ireland's problems. And I want us to be able to give that back. So I think that more and more, rather than us seeing Europe as a transactional arrangement of trade, we're now net contributors. That's good because we have built ourselves up. Is how do we now move on to building Europe? Because of the geopolitical challenges we face, there are big questions now around open strategic autonomy, also security and defence issues, where we pitch Europe, this grouping of 27 countries, very highly developed, but also with lots of vulnerabilities, as we've discovered around supply chain difficulties, over-reliance on fossil fuel, particularly from Russia. So I think that we were challenged in the past. I think there are more challenges for the future, but I think our Ireland's voice is heard well. But I do like to think that we would listen to where there are concerns in other member states and be very supportive. And you know, when you're in the room with 26 colleagues from around the member states, it's a huge privilege, and I don't take that lightly. And I unlike my good friend, the governor of the Banque de France, I think you need your sleep because you make your best decisions when you wake up refreshed. And those of us who are in a position to influence policy and to regulate, you know, it is a responsibility that I take extremely seriously, and I know you do here. And if I can say just on a personal note, when I took over the role in 2020 in October, where nobody could meet, I got lovely messages from the colleagues on my right and left. Now, we didn't meet for months afterwards, but I really appreciated that you reached out and that we could afterwards meet and have a conversation. So thank you publicly for that. That was really nice.
Okay, well, thank you so much. Unfortunately, we're out of time. It's been an absolute pleasure, I know personally for myself and Derville to have you, but also for everybody here. We really appreciate your time and effort in coming to join us, both in your remarks and having the time to spend at this chat. Without the fire, we're sorry, but we did our best.
I think we're going to have to drop the fireside.
Yeah. So I have to come up with a new term.
Exactly.
So really appreciate it.
So
thanks a lot also for your attention and for those of us, those who are online as well. Appreciate your time.
Thank you very much. Thank you.